Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, let's take a look again on the euro currency. So situation here stands a bit tricky. Well, in general, overall tendency is positive. The market is creeping higher, but currently it's major concern what will happen around the COP. This target, as we said yesterday, finally has been reached. You can see market hits this target, but today first we'll take a look at the interest rates. You will see some bounce on the interest rates. It's not really significant. Here stands relatively small by far. But in general, this is the upward reaction, some pullback on 10-year yields, and that's indirectly anyway will be supportive to the United States dollar. First moment. Second moment, currently market shows a bit dual price action that could be treated as in favor of the upward breakout, as in favor of the possible deeper retracement. In the current circumstances, guys, for those of you who are watching for taking the long position, I would suggest that it would be better to buy either on a deep retracement if it will happen somehow. If indeed we will get this reverse head and shoulders pattern. But this is not the fact, of course, because this retracement is relatively strong, should be. So 1975 from current 2240, it's a significant drop. And it should be triggered by some really significant event. We do not know what it could be. But definitely it will be some fundamental or statistics or something. Currently we do not know that. Alternatively, another way where better to buy, this is in case of upper breakout. If market will proceed higher, that will be the moment to consider taking the long position. Why? Because it will finish anything with this consolidation, COP, head and shoulders, something that sort. It just will break this wedge consolidation to the upside. And in this case, this top will be in focus. 24 top has become major destination that market would like to challenge. And while it will go into this target, to this top, this will be, more or less good point, good area to consider taking the long position on some minor retracement on intraday charts. Because that will stand in the past already. That will be the future when the market is standing, and that will be relatively safe opportunity to take the long position. That's my view on the current situation. Additionally, we discussed the possible chance to take position right now, but since we have clear bearish patterns as well in place right now, so it will be a bit psychologically more difficult to force yourself to buy when you have bearish patterns on the back. So, for instance, on the fall time frame chart, take a look. We have bearish reversal candle here is forming. It's creating the new top and closing below the bottom of the previous candle. It suggests at least some downward continuation. Second, in fact, guys, we have the double repo sell here. It looks very small, but in fact, it matched to Jordan Apple conditions. So take a look: 1, 2, 3, 4, 5, 6, 7, 8 bars, minimum number of bars to the upside. Close below 3 by 3, close above, close below again. Market will close here. Theoretically, we will get double repo sell that suggests deeper retracement. And also we have on the top reversal candle. So at the best case, market will stand inside the wedge because this double repo has relatively near standing target. It stands somewhere around 122, even 50% of this thrust. But potentially, who knows? Since we have long-lasting divergence here, it might be the starting point of the downward breakout. In fact, as if market returns back to this consolidation, this will be bad sign. But double repo suggests that it should happen. Because with this breakout, it means that this breakout will be some kind of the fake breakout of this consolidation, or something of that sort. Because market was not able to stay outside of this range and drop back. This will be negative sign. In fact, in this case, this price action right here and on the daily chart as well, we probably could treat some kind of the wash and rinse. So market just grabs stops above these spikes, this one and that one, and returns right back down. So this is the bearish patterns that we have. Double repo here with a reversal candle and a general greater bearish pattern, which is a wedge, and it has not been broken up yet. So market still stands inside of it. That what particularly keeps me outside of the taking the long position currently. At the same time, if you would like to make the decision somewhere here, that's the signs that you could keep an eye on. So first of all, on the hourly chart, market is forming kind of the triangle with this double repo. So currently we do not see yet the downside break. This is the pattern that you also keep an eye on, because in general triangle is a continuation pattern, and tight consolidation below the previous top and standing outside of this consolidation, this is always the bullish sign. So as I said, market should stay outside to keep the bullish context, and triangle perfectly fits to this condition. So while market stands in this triangle, so bullish context is valid, and market keep chance on upward continuation. And the second moment that you could keep an eye on is watch for bullish grabber here. So it is not formed yet, but it might be formed very soon. So keep an eye on it. If we will get the grabber here, maybe not this candle, but next, and market will stay inside the triangle, theoretically you could try to buy with the stop somewhere below these lows, below the triangle, because in the case of the breakout of the triangle, the short-term bullish setup will be over and we should be waiting for something else. Alternatively, bearish traders, so if you would like to go short, you could just focus on this pattern. It's double repo and it's reversal candle with the stops above this area, if you'd like to go short. But as you understand, since we have contradictory situation, different we have patterns in both directions and signs in both directions, they make mutual context weaker. So the bullish factors makes weaker bearish context and vice versa. That's why I'm calling this overall situation a bit tricky. I'm not make the decision on the bearish trade, so if you would like, you could try to do this. But speaking on the bullish trade, as I said, here as I explained why I prefer to wait for either upper breakout, upper continuations, confirmation that market stands above this previous 2240 tops, or deep retracement to the 1975, where we could get a bullish position based on a large daily pattern. That's just safer, and in this situation you will get more clarity. Well, although, as I said, it's not forbidden trying to make position, take position based on the additional patterns that could be formed within a few hours. This is grabber here, bullish side, and keep an eye on the triangle that market is forming on the hourly chart. So maybe these patterns will become the first early sign of the possible upward continuation. So as you can see, situation a bit sophisticated here, but we have taken a look in depth on the current patterns and the current situation. So I think you could make your own decision here.